Good evening and thank you for joining us. Tonight, a major shakeup in American retail. Tractor Supply Company, the largest rural lifestyle retailer in the United States, has announced it will shut down 75 of its PetSense pet stores. That's more than a third of the entire chain, gone in the coming months. We'll break down why this is happening, what it means for the roughly 6 dozen communities losing a local pet store, and what it signals about the broader health of consumer spending in rural America. Tractor Supply currently operates 209 PetSense stores. Of those, 75 will close, leaving approximately 125 locations operating across 23 states. Pet food industry. The announcement came during the company's second quarter earnings call. Tractor Supply, based in Brentwood, Tennessee, told investors and analysts that the decision was rooted in performance data. Pet food industry. The stores being closed were operating at negative cash flow, meaning they were actively losing money, which prompted the company to cut those losses and redirect capital back into its core business. Pet food industry. This isn't a small accounting adjustment. The closures will result in about $71.7 million in impairment and other charges, including a $5.9 million inventory write-down. Pet food industry MSN. That's a significant one-time hit the company is absorbing to walk away from underperforming real estate. Tractor Supply has brought in Gordon Brothers, a Boston-based firm, to handle the disposition of the leases tied to the closing locations. Pet food industry. As for exactly which stores are on the list, the company has not publicly disclosed the full list of closing locations. Pet food industry. But we do have some regional detail. In Arkansas, for example, 6 of the state's 9 PetSense stores are closing. Specifically, the Arkansas locations shutting down are in Searcy, Beebe, Jacksonville, Pine Bluff, El Dorado, and Fayetteville, while the Batesville and North Little Rock stores will remain open. Cark. If this pattern holds nationally, we could see similarly uneven closures state by state, some markets losing the majority of their footprint, others largely untouched. Segment 4. The company behind the decision. Min. Now, a little context on who we're talking about. Tractor Supply was founded in Chicago back in 1938, originally as a mail-order tractor parts business. Over the decades, it grew into the largest rural lifestyle retailer in the United States, MSN. The PetSense chain itself has a shorter history with the parent company. Tractor Supply expanded into the pet business through its 2016 acquisition of PetSense, a specialty chain selling pet food, toys, and supplies, along with services like professional dog grooming and in-store pet adoptions. PetSense itself was originally founded back in 2005 and primarily serves small and mid-sized communities. MSN co-star. As of late June, Tractor Supply operated 2,463 of its namesake stores across 49 states, alongside those 209 PetSense locations in 23 states. So in the scheme of the overall company, PetSense is a relatively small piece. But this cut represents a serious downsizing of that division specifically. Big O Finance. Here's where it gets interesting, because this isn't happening in isolation. Company leadership has framed this as part of a broader strategic pivot. CEO Hal Lawton told analysts on the earnings call that the company is reallocating capital toward what it sees as higher return initiatives, one of which is brand new, veterinary care. Tractor Supply recently completed its acquisition of VIP Petcare, a veterinary services business that operates clinics in about 2,700 retail locations, including 1,700 Tractor Supply stores. That acquisition closed just months ago, back in May of this year, and it generated $9.5 million in related expenses during the quarter. Pet food industry +3. The thinking, according to leadership, is that veterinary services, prescriptions, and pet products can now be connected across both physical stores and digital channels, creating what the company calls a more complete pet ecosystem. In other words, fewer standalone pet stores, but a bigger push into pet healthcare and services delivered through the company's already massive network of Tractor Supply locations. Leadership also said the capital being freed up will be redirected toward initiatives like Project Fusion store remodels and the company's final mile delivery network. Chain store age. Tractor Supply is also hitting the brakes on its own new store growth. The company now expects to open approximately 85 to 90 new Tractor Supply stores in 2027, down from its previous target of 100 locations. Chain store age. That's a meaningful pullback for a company that has spent years expanding aggressively, and alongside that, Tractor Supply withdrew the long-term financial framework it had introduced at its December 2024 Investor Day and updated its fiscal 2026 guidance, now projecting comparable store sales in a range of down 1% to flat. Retail touchpoints. That's a notably softer outlook than what investors had been expecting. Tractor Supply's net income fell 16.1% to $360.7 million in the quarter, ended June 27th, down from $430 million in the same period a year earlier. Earnings per share decreased nearly 15% to 69 cents. On an adjusted basis, net income came in at $423.5 million, or 81 cents per share. Net sales did increase 2.3% to $4.54 billion. Chain store age. So sales were actually up, but profitability took a real hit, and according to reporting, an unusually difficult May dragged down what had otherwise been a mixed but manageable quarter for the retailer. Retail touchpoints. Now let's zoom out, because Tractor Supply is far from alone here. Softer discretionary spending continues to weigh on parts of the retail sector broadly, and more chains are responding the same way, closing underperforming locations, slowing new store openings, and redirecting investment toward businesses with stronger long-term returns. MSN Macy's, for instance, is in the process of shutting some of its namesake locations, and in one of the most headline-making cases this year, Saks Global, now rebranded as Exemplar Luxury Group, closed about 24 Saks Fifth Avenue and Neiman Marcus stores, along with nearly its entire Saks Off Fifth chain as part of its bankruptcy proceedings. CoStar. What makes the Tractor Supply story notable is the audience it serves. This is a company built around rural and small-town America, livestock owners, farmers, hobby ranchers. If a retailer this deeply rooted in that customer base is pulling back, it raises a broader question. Is discretionary pet spending, and rural consumer spending generally, cooling off faster than expected? So how is the company trying to offset this pullback? Tractor Supply has launched a nationwide partnership with Instacart aimed at growing its addressable market without opening new stores. It's a classic retail playbook move right now. Grow digital reach while trimming physical footprint. Big O Finance. Still, this pivot challenges what had been a fairly bullish investment thesis for the company, one that had projected revenue reaching $18.6 billion by 2029. Whether that target is still realistic is now an open question for analysts. Big O Finance. Tractor Supply is closing 75 of its 209 PetSense stores, taking a $71.7 million charge to do it, and using the freed-up capital to double down on veterinary services, store remodels, and delivery, while also slowing its own new store growth and cutting its full-year guidance. It's a story about one company's specific strategy shift, but it's also a window into where consumer spending stands right now, even in parts of the country that have historically been fairly resilient. We'll continue to follow this story as more details emerge on exactly which locations are closing and how the timeline unfolds over the coming months. That's our report for tonight. Thanks for watching. We'll see you next time.